No, we shouldn't really have any surprises. Traditionally, the second quarter is always the strongest quarter in the year. So, as you mentioned, we had about 1.3% year on year in the first quarter. Growth for second quarter probably should be around 2%, consistent with an annual forecast of around 1.8% for this year. Is basically what we're looking at. So, no really reason to expect any variation much from that.
And the big question is how vulnerable is the economy to U.S. sanctions?
Well, look, you've got to split that into two parts. If in terms of sanctions that have been imposed since 2014, you can certainly argue that Russia has adapted quite well. In many ways, it's actually forced the Russian government into taking action that was long overdue. And for example, the weak ruble policy, a greater spending discipline, all of which have helped stabilize the economy around this 1.5%, maybe 1.8% level, which it's capable of sustaining. But while that's correct, the real issue is with the latest sanctions that we saw imposed from last year by the US and obviously recently, it is making it very difficult for Russia to attract foreign investment. Russia is perceived to be a high-risk location. Their sanctions are definitely putting off a lot of potential investors. And that without that increased investment, the economy cannot move up into a higher rate of growth. It can stay at around 1.5%, but it needs 3.5 to 4.5, and it can't get there without increased investment. And sanctions are a problem blocking that. So it's more about the future.
Okay, understood. In the here and now, the pressure on the ruble that we're seeing, when you take a look at other places like, let's say Turkey, right, their big problem is just way too much dollar-denominated debt. Certainly not the case in Russia, though.
No, not at all. In fact, this is kind of one of the, I suppose, consequences of 4 years of sanctions is that the government has been forced into greater discipline because they couldn't borrow the money and therefore weren't inclined to run deficits and were being, I suppose you could say, relatively frugal. So today, Russia has the world's sixth lowest level of national debt. Foreign debt to GDP is only about 3.5%, so a very low level. The problem for Russia is not, as you say, debt servicing or a strained balance sheet. It's more about how to attract new investment. But you mentioned the ruble. This is kind of one interesting point. The government is not too unhappy with the weak ruble. The weak ruble has been almost the single most important reason why the economy has survived the last 4 years of weak oil and sanctions. Weak ruble has helped substantially cut down imports. It has helped boost industries like agriculture, domestic manufacturing, and is increasing exports. So there'll be nobody in the Russian government overly concerned about the weakness of the ruble in the last couple of days. They will see that as something that might even be a positive over the short to medium term in terms of boosting exports and making the economy more competitive.
Yeah, indeed. Nobody's arguing there. And I guess they're going to be keeping at least half an eye on the direction of oil prices for the rest of this year. But back to your point about this condition of oversaving, what must be oversaving in Russia's economy. Does this speak necessarily so much to Russian frugality as it does to maybe lack of confidence? I mean, economists talk about animal spirits. They don't seem to be evident in Russia at all.
No, you're right. Confidence is obviously a big thing, and the government does pay a lot of attention to the opinion polls, and quite sensitive to opinion polls. But yes, the confidence has been generally weak for years. There's always a concern about what might be coming next. I mean, for example, last year there was kind of I would say, people and companies, investors were quite relaxed about sanctions, and then Russia got hit hard with the US sanctions of August last year, got hit hard again in April this year, and again just this week. So there's always this element of what might be coming next, and that's the consequence of that is means that people are less willing or less confident to invest, to spend, and it leads to this low level of FDI as well as higher level of savings, and that's of course keeping economic activity low, and that's really not going to change. I think for over the medium term, certainly not this year.
And Chris, very quick, last one before we let you go, and back to the sanctions. The U.S. sanctions certainly must be making China look a lot more attractive as a trade partner for Russia.
Yeah, we've seen that build up over the years. Now, a lot of the reason for the increased trade that you mentioned in the introduction, of course, is oil and gas. Russia and China have been building oil pipelines and gas pipelines. And of course, the major pipeline will come on stream sometime next year. This is the Power of Siberia gas pipeline, which will substantially boost the volume of exports from Russia to China. So a lot of it is commodity related. But nevertheless, with this combination of the weak ruble, but also the China tariffs, which against US food imports makes Russian food imports a lot more attractive, both in monetary terms as well as availability. And with the expanding Belt and Road, then the whole transport network across Russia and Central Asia is so much better and so much easier. So yes, you can certainly see this kind of trade relationship between Russia and China continuing to build over the coming years.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.